This morning on BRN, what is permanent life insurance? And joining me now is Phillip Snyder of the Warner Companies. And full disclosure, he is my father. Dad, so great to see you. Thanks for joining us this morning.
Hi, Jeff. Good morning. Thanks for having me.
So we've talked about different types of life insurance. One type of life insurance I want to ask you about is permanent life insurance. What is permanent life insurance?
Okay, well, permanent life insurance, as distinguished from term insurance, is a product that's designed to pay a death benefit whenever death occurs. That's its fundamental purpose. As part of that, typically a permanent life insurance policy will build cash value within the policy, which supports the payment of the death benefit later on in life. So one product is designed to fill a multitude of possible needs, but it is permanent in nature, as opposed to term insurance, which typically is used to fund the need for a predetermined finite period of time, 5 years, 10 years, 20 years, 30 years. So that's a clear distinction.
So if I want to get life insurance, how do I make the determination between term life insurance, which we've talked about on the program, whole life, which we've also talked about on the program, or permanent life insurance? What makes you determine which way to go?
Well, let me just address the one point. Whole life insurance is permanent life insurance. Whole life insurance is typically a fixed premium product. That is, you buy the policy, the premium is known, it's not going to change, it's fixed for life. Traditionally, whole life insurance endowed at age 100, which meant the cash value equals the death benefit at age 100. Most whole life policies sold today distribute a dividend, and that dividend is effectively a tax-free return of unneeded premium, and that dividend can be used in a variety of ways, one of which is to reduce costs. Of course, the dividend is not guaranteed, it's going to vary over time. So that's a whole life policy. Then you have flexible premium policies, which are also permanent policies, where the policy owner has the right within certain parameters to adjust the premium year over year as their needs may change, as their ability may change, as their life expectancy may change. They can make those adjustments. So they're essentially policies to accomplish the same goal, only their structure is slightly different.
And are there key features that are included, or you can bolt on? That's my terminology as a rider to these types of products. And are there different features that are available?
Well, yeah, on permanent products, you could typically add family members, a spouse, children to these policies if you choose to do that. You could add a long-term care feature to some of these policies, if not all, that enable you to access a portion of the death benefit in a predetermined manner, contractually guaranteed, if you need long-term care and incur the cost for long-term care services. We don't, I think, have the time here and now to go into depth with that. So those are two things that you can do. You can add features that will pay the policy if you become disabled. You can add accidental death benefits that enhance the policy's value upon death. And there are lots of other things you can do as well.
Are these products, permanent life products, suitable, for example, as a supplement to a 401k plan or other type of retirement plan?
Potentially, yes. Life insurance has Permanent life insurance has two very favorable, well, three actually, but favorable tax benefits. One, of course, the death benefit is paid to a named beneficiary, is received income tax free. Two, the cash that you build within the policy over time, the earnings on that money year over year is tax deferred. There's no current taxation on the growth within a life insurance policy year over year. And three, you can distribute much, if not all, of the cash that you accumulate from within the policy, take it out at a later date, i.e. as a supplemental income benefit, and you can do that on a tax-free basis. So there are lots of things you can do and lots of tax advantages to permanent insurance, and those types of products could be used as an income supplement in retirement.
So, if I'm thinking about buying a product like this, what are things that I need to be thinking about first and foremost? How does this fit into my financial plan and my strategy?
Well, that's what you need to think about. You need someone to guide you through the process of figuring out, what do I have? What are my goals? What holes in my plan do I have? What supplements am I going to need? And if insurance fills some of those gaps, then you need to figure out, what kind of insurance do I need? For example, if I have 10 years to go on a mortgage, home mortgage, for example, I probably would cover that with term insurance, just isolating that as a simple item. On the other hand, if I wanted more income in retirement and I wanted that income to be favorably taxed or not taxed at all, then I have to figure out, projecting out, how much more income am I going to need? What are my means through which I can create that additional income? Insurance could then be a component of that. And then you kind of back into, once you have all the facts at hand, what's my plan? What are my projections? And how can I use insurance, if it ought to help me fund those or meet those objectives?
And are there income thresholds? For example, if I earn less than X, I shouldn't even consider this type of product.
Well, permanent insurance is certainly more expensive than term insurance, far more expensive, particularly at younger ages. So you have to have the ability to comfortably pay the premiums, because these are permanent products. And with most exceptions, and with some exceptions, excuse me, it takes time to build cash in these policies. So if you buy a permanent policy and then the policy becomes unaffordable in the very short term, you're going to likely get very little back out of that policy, and you will have lost money. So you have to be able to afford the premiums. The flip side of all that is there are suitability issues with respect to certain of these permanent products that you actually can buy. Some are very investment oriented. They have investment sub accounts within them. Some products have 100 different choices into which you can allocate your premiums and your cash within the policy. So these are in effect securities. And therefore, I, as a broker, have to be specifically licensed to sell those type of products. And those products are have suitability requirements as well. So permanent insurance is a good product. It's a product everyone in all likelihood could use to some extent. It's just, how does it fit into my plan, and what can I afford to do?
Yeah, well, Dad, well said. And look, we really appreciate coming on the program, and we'll look forward to having you back again very soon. Thank you so much.
Oh, sure, Jeff. Take care. My pleasure.
Don't forget to subscribe to our daily newsletter, The Morning Pulse, and get all the news in one place. Details at our website. Until tomorrow, I'm Jeffrey Snyder. Stay safe, keep on saving. And don't forget, roll with the changes.